Years ago, at the end of every week, I used to go through the trades I actually took during that week from the Monday to Friday trading period. And I feel like we might as well bring it back. So I take a lot of trades. Well, I wouldn't say a lot of trades. I do have weeks where I have 0 setups. I do have some weeks where it's 1 trade, some weeks where it's 3 trades. It could be busy week, slow week. But I'm going to give you the reality of trading and show you this week, for example. And I'm going to go through the trades I've actually taken. I'm going to go through the WillssFX book. I'm going to go through the edge wonk, and I'm going to go through the charts to actually show you what actually happened. So we're looking straight away on edge wonk, and this is where you can kind of see the whole month's profit. So if we go back to when I actually started this account back in March of 2024, I'm going to go through every single month because it's kind of like a swing update too. I did the videos where it's like a 3-month update, 4-month update, 5-month update, but I haven't actually done one this month or the last 2 months, I don't think. So first month we made around 1.2%, around that sort of range. Month 2, we actually made a decent amount. Month 3, we ended up losing this month around 0.89%. Again, you'll notice that I'll have a loss or 2 losses and then 1 win can wipe everything out. So this one was unfortunate because we didn't have a full win, the trade was invalid. But again here, 1 loss, 1 win wipes it out. 1 loss, again one of these trades wipes it out and we would be in profit for the month. Obviously this one was basically a break-even trade. Again, August here, these losses combined would have been wiped out with this 1 trade, which is how we still made profit in August. And then as you see in September, which is this month, and then this week here, we started the month with a winner, then we had a loss, then we had another loss, and then we had a win. So these are the 2 trades I'm actually going to go over in this video, this loss here and this win here. So now I'm going to quickly take you onto the charts to show you the trades. The loss happened first, so we're going to talk through that one first. And this is where it actually happened. So usually when I'm trading, I take the same setups every single time. So a lot of people, they'll do their analysis and they'll be like, okay, but I don't feel like this setup looks very good. I don't feel like the probability of this winning is very high. You have to kind of remove that thought process completely from your trading. You can't go into the markets thinking, do I think it's going to win? If I don't, then I won't enter. That is the worst mindset to possibly have, because our strategy is there for a reason. We're entering these trades for a reason because our confluences are there for a reason. I actually printed it out today just to have on my desk, but you won't be able to see the exact parameters, but this is my strategy. So every single scenario that could happen, I have it mapped out. So if there's certain things that actually happen in the markets, I know exactly what I have to do next. This is important with breaks of structure, invalid trades, management of trades. You need to know exactly when to enter a trade and when not to enter a trade. You need to know exactly when to manage a trade and when not to manage a trade. You need to know when to increase your risk, when to lower your risk. If there's not like a set system in place, it can be difficult and there can be human error. And human error is what we don't want in our trading. We want it to be as automated as possible. If you could turn your trading into an algorithm that could trade for you, that would be the best thing possible. And that's what I'm in the process of doing now, because human error can cause you to make mistakes. A robot isn't going to miss a trade because the trading view alert didn't go off. The algorithm won't miss a trade because they don't have someone knocking at the door when they're meant to be entering. When we're trading ourselves, so many different scenarios could happen where we could miss a trade. Your Wi-Fi could go out. You could have a power cut. Anything could happen. But that won't happen with an algorithm. That's just the honest truth about it. So bear that in mind when you're thinking about your trading routine. So we're here on AUD USD, a pair I used to trade back in the day. Used to do really, really well, especially on my FTMO funded account. I remember one beautiful trade. I think it was probably my second or third payout with FTMOs. A beautiful AUD USD short. I remember it still to this day. But we're seeing here that last week, the 2nd of September, which was last week, I'm pretty sure, I guess so, the Monday of the NFP week, we did have this short. This was the trade that I mentioned and showed on the edge wonk that was the first winner of the month. So we had a 2% winner, and that was this trade. So we're not going to go over this too much, but price broke structure to the downside out of these levels. We got the entry in a retest, and then price went down like that. Pretty self-explanatory. I go into more detail on these trades in my mentorship, obviously. So if you want to learn my full strategy, check it out on the link in the description. This is just a basic overview and how I manage my positions, but the technical side is in the mentorship. So you'll see that it's kind of a similar position that we actually had on this trade here. Price obviously had this breakthrough here, which when we were entering up here, we knew price was going to fall down, or we had anticipated a fall in price. We retested into the zone again, just like this. Support and resistance traders would be loving life because price broke and retested in here. Would have been just amazing. So we were looking for the same to happen. So you see imbalance left behind, imbalance left behind, imbalance left behind. We're looking to get in on these retests to go and be in when price falls further to the downside even. So we had this break of structure here. So this gives us the sign that, okay, the trade is now in play. So now we can look to get our entry. We got the entry here. We actually got tagged in at around 6 p.m. So we obviously had to hold through spread hour, which wasn't too bad. As you see, there's always a bit of a discrepancy here when the spread hour does hit. And then we obviously had to hold over the weekend too, as we did enter this on a Thursday, and it didn't go anywhere really until the following Monday. And the trade did actually end up going to the upside, and we were wrong on this trade. But I managed to minimize the loss. So obviously this was a high, and this high was created after we actually got into the trade. So when I'm in my trades, I'll look for invalidations, points of interest that have to be broken for the trade to be invalid for me to close the trade. So when this high was created and then price went down, this was kind of the new higher low. So this is fine. This is fine because price could come up, retest, and then drop again. And this is completely fine. But if this high here gets rejected and kind of invalidated, then we want to be out of the trade. However, when this actually happened, it was 6 a.m. and I'm not on the charts at 6 a.m. So when actually I went on the charts and I saw, okay, price is now broken and closed above and we're continuing pushing up, I closed and I basically minimized the loss on this trade. And that's why the loss wasn't a full 1%. And it was just under 0.73% or something like that. So instead of losing full 1%, we gained back that extra 0.27%, which if you're able to minimize your losses because of an invalid setup, obviously we could have minimized it by a lot further if we were awake, but that's swing trading. It's not always going to be perfect, but we were able to get some of the loss to be smaller, which is again a positive, and we followed the plan perfectly. And the plan did make us lose less than would have been if we didn't manage a trade. So that's another good thing to come out of it too. So if we're actually talking about the next setup now, this was actually on GBP USD, this setup here. So if I actually take you back to the trade, this was kind of what happened. So we had this high here, price broke the high, and we obviously had this level here to retest into. So we were obviously looking for price to come down to this level again, and then price did come down to this level and we got in around here, and I think we had stops around there, just below this level here, around 55 pips, something like that, and we were targeting this high, so it must have been slightly smaller around there. So this was the trade. We were targeting this high here, the previous high, because as we know, if there is a previous high, that is always a good place to target. And this was the trade. Price then went to the upside, hit a profit. But this trade hit a profit with the assistance of FOMC, the interest rate decision. And we did have an interest rate decision at this time, and it worked out perfectly. And the reason I'm fine with holding through trades like this through the news is because in my testing, I have always traded through news. So when I go into the live trading, into the live markets, I'm comfortable trading through the news because I've never not traded it in my testing. So my tested results are based off of any market condition, bank holidays, news releases. I've traded for it all. So especially with swing trading, the slippage can't be as bad as with day trading, for example, because people think that slippage is, bad always. But let's say I'm trading this with a 10 pip stop loss and I get slipped. If that slips me 10 pips, my 1% risk is then turned into 2% lost. So I've lost 100% more than I wanted to lose. Whereas let's say I get slipped 10 pips here, I'm only losing 0.2% extra. So the slippage isn't as bad because obviously the lot sizes are smaller, the stop losses are bigger. And I always think, okay, well, at the point of the release, I was around 60 pips away from the entry. And if price is going to drop over 60 pips in that amount of time and cause more slippage, then I was very wrong. But with my analysis, the trade was still perfectly fine. I quite enjoy trading news, so that was a bonus too. But yeah, that is the setup, or that was the setup. And as you see, price retested the entry again and then carried on to the upside. So it would have been a fine anyway, even if the news didn't cause this impulse reaction. So this is the WillssFX book. I've shown this throughout the whole swing trading update series. And as you see, we've been going to the upside quite nicely. What I have noticed is after a break to the upside, I always have 2 or 3 losses. So you see I have 1 loss here, push to the upside. 2 losses, break the highs. 2 or 3 losses, 2 losses, win. 1 loss, win. 1 loss, win. 2 losses, win. 1 loss, win. 2 losses, win. So it's I think it's a nice equity curve because the max drawdown has been 3.35%, even though the max actual drawdown was minus 1.6%. But that's completely fine. We have a 45% win rate, and the average win is actually double the average loss. So we're talking about pound value here. Obviously the average win here, the pip value, it kind of is skewed because some setups could have 25 pip stop loss. Some could have a 70 pip, 100 pip stop loss because it is swing trading. So it's not like my normal strategy where my average win would be 30 pips and my average loss would be 10 pips. I kind of don't really take this into account at all. And I only look at it based on, the profit overall. And obviously we're negative pips here. So this means that the trades we've won have either been less pips on the win, and the times I've lost, maybe I've had 100 pip stop losses. But again, it's completely fine. And as you see here, this is kind of what everyone really shows when they have a WillssFX book. We've had 6 profitable months, 1 losing month. And you notice that the months are consistent. Like when I win, it's either 2.3%. We've had that basically 4 times, or it's 1.2%. And that's happened, over the 7 months, it's been fairly consistent. And we're averaging around 1.6% per month overall anyway. So you'll notice that the absolute gain has gone down to plus 3.3%. And the reason behind this is, but as you see, I've been depositing money. So these orange dots are deposits. So these orange dots on the screen are actually deposits. So I've been depositing more money. I actually withdrew the money because I withdrew from the wrong account. So I just put the money straight back in afterwards. But yeah, been depositing more money. So obviously the wins are bigger now, but we're still up 11% in the account. But the absolute gain is down because obviously deposits have gone up and it counts off deposits, not off of obviously the total profit. 11.22% in 7 months. I'm very, very happy with that. People will say that it's not a lot of profit and they can make 10%, 20% in a month, but you just can't. You can make that once or twice maybe, but you won't make that every month. Otherwise, JP Morgan would be hitting you up right now, offering for you to trade for them. People don't realize that this style of trading, 1.22% per month consistently, will always be more attractive to an investor than someone who has a crazy difference in their losing months, their winning months. 9% this month, minus 5% next month, 25% one month, and then minus 30%. Even if you're making more profit over the year, And if you're trying to grow your money in your accounts over time, even if it's just your own money, consistency always wins. People obviously don't like investing in crypto, for example, because it can lose 50%, but then it could make 60%, but people don't like losing and having the risk of losing 50% in a week, overnight, in a few months. It's not ideal. People are more interested in investing in the S&P 500 that consistently averages, 7-8% a year, which is great. So if I'm averaging more than the S&P 500, here at 11% in 7 months, on a year we could be looking at 18-19% potentially over a 12-month period, which I'd be very, very happy with. If I can do that consistently and continuously depositing into the account and growing it, then this could be definitely something big. Obviously the next goal is to get it to 12 months and see the performance over the first year of live trading. No matter how much testing we do from previous data, back tested data and collecting data on your strategy, you need to be able to perform live. So performing live on this from scratch, showing you every single step. This is my first month of swing trading in March, and obviously we're 7 months in and we're doing quite well. I'm pretty happy with the results. This is absolutely amazing. So I want to show you guys the whole process and the truth behind long-term trading. So that's what we have here. So if you want me to continue the updates, be sure to let me know down below, and I'll catch you guys in the next video.